Welcome back, folks, to Investor Diaries. Now, as you would notice, we are now in person today. How does it feel, Happy, to be in person?
It actually feels amazing. Like Zoom had its own advantages, but the in person collaboration takes it to another level.
That's right. So, we are excited to bring you brand new spanking content. And if you haven't done already, please smash the subscribe button so you don't miss the latest and greatest content. All right, now let's get back to it. Now, folks, you may have come across topics or themes like the metaverse, virtual reality, augmented reality, AI or artificial intelligence, machine learning, and blockchain. These are some of the themes and technologies that hold great promise for the next decade or so. And our investment thesis is that companies that solve problems either across these themes or using these technologies and additionally have a robust business model could be good investable opportunities for today. Today, we are going to discuss a company that is creating waves in the AI space. Yes, we are talking about the company C3AI.
Alright, so C3AI. This is a company that's located just outside San Francisco. The company offers various software as a service applications for enterprises that enables them to design, develop, and deploy enterprise-wide AI applications.
And side note, the company's ticker symbol is actually AI, which itself fetches some brownie points for the company. Now, the company's products allows these enterprises to automate actions from everything from CRM to logistics. The company has an impressive and growing client base such as Baker Hughes, ticker symbol BKR, and Raytheon Technologies, ticker symbol RTX, and has been successful in rolling out to smaller businesses as well.
Like most SaaS stocks, the shares have actually been hit hard so far in 2022. They currently trade at about $21 a piece, and their market cap is in and around $2.3 billion.
Now, let's have a look at the recent events. Almost all SaaS stocks have been under pressure so far in 2022, partly as a result of the rising interest rates, which tend to punish growth stocks disproportionately. A good portion of the recent weakness in the stock can be attributed to a new short report from Spruce Point that came out 2 weeks ago. In the report, it alleged that C3AI had a pattern of exaggerated business claims and also experienced a significant CFO turnover in the company's history.
So, a day before the report hit the wires, the company actually announced a $100 million stock buyback program.
And easily, one of the best news for the company came in the past few months. It was announced that C3AI won a 5-year contract of up to $500 million with the Department of Defense. This agreement will provide all agencies of DoD with access to C3AI products to enhance modeling and simulation at the government department.
So, folks, it's very difficult to exactly pinpoint why C3AI stock fell from grace. The 85% drop in the stock price would have caused C3AI's employees to be anxious and nervous. But fundamentally speaking, the company has continued to excel, show excessive growth rates, major wins, new products, alongside working with the federal government and ever so expanding its customer base.
The name of the game here is business transformation, and I'm sure you have come across that word multiple times in your career or in one of the other videos. In the aftermath of the pandemic, two major things were realized by companies. One, technology infrastructure has become the lifeblood of most companies, and IT is now a very strategic part of companies' roadmap and not just any other function in a company. Two, with skilled workers in high demand and short supply across many functions and industries, companies are being forced to innovate and drive business transformation to stay lean and compete. C3AI's motto is to solve the previously unsolvable and build and deploy AI applications to tackle tough business challenges.
So it's not just companies that are recognizing the need to transform their operations. However, C3AI has recently made huge inroads with the US government.
Alright, Appy, now let's look at some of the key catalysts that are acting as tailwinds for this company. Number one, C3AI is still exhibiting hypergrowth. In its most recent quarter, the company grew north of 40% year over year. This actually represents an acceleration over its growth CAGR since 2019. The company is also scaling from a customer base perspective and is now at over 200 customers, compared to approximately 50 at the time of its IPO.
Second, industry diversification. So if you look at artificial intelligence, purely from a technology standpoint, it's a horizontal technology, meaning that it can actually be applied and benefited from by companies across any industry. Historically, C3AI has concentrated in heavy manufacturing and oil due to its pre-existing relationship with Baker Hughes. Moreover, recently the company has actually expanded its application to cover other industries, and these include financial services and healthcare.
3. C3AI star leadership. Its CEO, Tom Siebel, is a well-known industry veteran and best known for selling his startup Siebel System to Oracle at a $5 billion exit. Now, Appy, the fact that its CEO has founded and started companies and has had successful exit could mean something for the company.
And that is the reason the fourth point I'll talk about is powerful technology. So C3AI is one of the best recognized names in enterprise AI transformation, and this is an area that will continue to grow over the upcoming years. One point to note when I say continue to grow is that corporates will be investing more and more dollars in this as businesses look towards transforming and even automating their operations.
Now, in spite of these strengths, meanwhile, C3AI's valuation had sunk to what can rightly be considered as value levels. At current share prices, the company has a market cap of approximately $2.5 billion. After we net off the $968.7 million of cash on the company's balance sheet, C3AI's resulting enterprise value is only $1.6 billion.
So for the upcoming fiscal year F23, meanwhile, the Wall Street analysts are actually calling for $333.8 million in revenue, and this actually represents 33% year-on-year growth. What this does is it puts C3AI's valuation multiple at a mere 4.8x price to sales. And it's interesting to note that in its heyday, it was actually valued at 20x its revenue.
As mentioned earlier, the fact that the company authorized a $100 million share buyback program, which represents approximately 4% of its current market cap, signals that the company believes that it is currently undervalued. Additionally, this also signals confidence in its balance sheet. The fact that the company can well afford this buyback with its $1 billion of net cash flow on its balance sheet.
So it's time to review the recent financial results which the company released in early March.
C3AI's revenue in Q3 grew at 42% year over year to $69.8 million, beating Wall Street's expectations of $66.1 million, an impressive 7-point margin. The company's revenue growth also accelerated slightly compared to its 41% year-over-year growth in Q2. Customer development is also a big highlight for C3AI. Now, outside of Department of Defense, the company has also signed some major wins this quarter, including companies like of Shell, Bank of America, Ernst & Young, and FIS.
One note on profitability. Admittedly, C3AI's losses are still harrowing, which aside from customer counts is investors' big hesitation for the company. Now, Q3 pro forma operating margins came in at negative 22%, which is 2 points better than minus 24% in the year ago quarter.
Now, there are 2 points of comfort in profitability. Number one, C3AI touts sky-high pro forma gross margins at approximately 80% mark, which means it has a strong capacity to expand its bottom line at scale.
Additionally, it's got $1 billion in net balance sheet cash, and that's actually enough to absorb years and years of losses without raising additional capital.
Now, what do we make of all of this? We believe that this company is a firm buy at Investor Diaries. This company, C3AI, has promise and is growing rapidly. The key customer wins and the DoD contracts are further validations to its growth story.
Agreed. So the 5x price to sales valuation may not be cheap, but we can agree that it is reasonable for a company growing at this pace. Now, the stock may definitely have fallen out of favor from the investor from a macro trends perspective. Having said that, we would only recommend this stock to the most patient investors.
That's a wrap for today, folks. Thanks for tuning in. and do let us know your thoughts about this company, C3.